This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Streak snapped. The Dow's red-hot run comes to an end as the post-election rally cools off. Buyer beware. Shipping stocks are surging, but investors are advised to proceed with caution.
Well, it definitely has affected our business.
Ripple effect. As coal jobs disappear, entire towns feel the impact. Tonight, we hear the stories from Powhatan Point, Ohio. Those stories and much more tonight on Nightly Business Report for Wednesday, November 16th. Good evening, everybody. Welcome. I'm Sue Herrera. Tyler Matheson is on assignment. An unusual thing is happening in the stock market, and it is raising some eyebrows. Shares of shipping stocks, many of them tiny micro caps, have been surging since last week's presidential election. Just take a look at dry ships. The stock is up about 1,500% in the past week. Globus Maritime has soared about 675%, and Sino Global has climbed 450%. And this performance is even more peculiar because the sector has been facing a number of challenges as it deals with global overcapacity and sluggish trade. You may recall the bankruptcy filing earlier this year of South Korea's Hanjin Shipping. So what's going on? Dominic Chu takes a look at some theories and why investors need to proceed with caution.
The stock market has been riding high since the election, and there have been a lot of bets placed on companies in industries that might benefit or be hurt by a Trump administration. But the recent surge in small and micro cap shipping stocks has defied a lot of market logic. The question is, what is fueling this parabolic move? And traders are offering a multitude of theories on why bulk cargo shippers could be seeing brighter days ahead. Could a Trump presidency lead to a surge in spending on things like roads, bridges, and other infrastructure projects? If that were to happen, there could be a lot of demand for things like gravel, concrete, steel, etc., which could lead to more activity and more revenue for cargo shipping companies. Others believe the move in some of these smaller market cap shipping stocks has to do with technical market factors, like traders rushing in to buy stock in order to close out possible bets on stock market declines. But buyers should proceed with extreme caution, even if you believe that the story is bullish for shipping stocks. Not much can justify a rise, in some cases, by 1,000% in a little over a week. The mind-boggling move isn't just catching the eye of traders. The NASDAQ stock market halted trading of microcap shipper Dry Ships early on Wednesday morning because it was requesting more information from the company about what's happening with its stock. NASDAQ said it would keep the trading halt in place until its request for information was fully satisfied. Dry Ship stock has traded below $5 per share just before the election and rose to over $100 a share earlier this week. It and many other bulk shipping companies had seen their stocks fall dramatically over the last few years, and many are still down a lot since their highs in that span, even with this big rally. Regardless of the possible reasons behind the big moves, anytime you see trading action like this in small and micro-cap stocks, many experts quote that Latin phrase, caveat emptor, translation, buyer beware. For Nightly Business Report, I'm Dominic Chu.
Michael Weber joins us now to talk more about what you need to know before investing in micro-cap stocks. He is Managing Director of Research and Senior Analyst at Wells Fargo Securities. Michael, welcome. Nice to have you here.
Thank you for having me.
Before we get to the potential pitfalls, what do you think is going on in this particular sector?
You know, the degree of volatility we've seen in the past week it's been pretty extreme, even for a sector like shipping. You know, I think that what we're looking at here is it's almost a bit of a perfect storm. All right, we're really three things happening. You know, first, you get a Trump rotation trade. You get a lot of money put into riskier assets. And you get a bit of a retail bid into these stocks, so a lot of retail money flowing in that drives some short squeezes, so the outperformance accelerates a little bit more. And then most recently, we think we've seen basically the machines take over. We think we've seen a significant amount of volume driven by algorithmic trading, which is how you're getting these kind of parabolic stock rises that we've seen in the past 3 to 4 days.
And to be clear, for those who maybe don't understand what that is, that's a program that is put into a computer by a trading desk or by a money manager, and it's triggered when a stock hits a certain point in the program.
That's right. So you'll get a bit of a short squeeze, and then all of a sudden, once that performance hits a certain level, a program will take over and it'll just ride from there. So I think that's what we've seen. I don't necessarily think the last 2 or 3 days have been indicative of fundamentals, to say the least, but even buyers or sellers.
So, but in a market that has had a little less volatility than some traders or investors would like, making it harder to make money, a lot of times when you see these stocks, the individual investor wants to get in. So what do they need to know before they even venture anywhere near a microcap, whether it's in shipping or some other sector?
Yeah, the message here is to be very careful, especially for names like we're talking about that have these parabolic pricing moves. As little as a month ago, we were talking about whether these companies would still be in business. Now they're up 1,000%, 2,000%. So if you are going to look at those sectors, there are companies usually within those sectors that have solid balance sheets. It's a bit less like buying a lottery ticket and actually buying a company, and you're actually investing. So from our end, we really look at the balance sheets. We want to make sure that we can minimize our downside risk. If we're going to take a risky bet on a sector like dry bulk, which is easily the most beaten up and just most downtrodden of the sectors that we cover, we want to make sure that balance sheet is in really good condition. And I think most of the stocks you're seeing that are really off to the races here and having these big moves are really the bottom of the barrel.
So good old stock picking due diligence.
Absolutely.
Michael, thank you very much.
Thank you very much.
Michael Weber with Wells Fargo Securities. On Wall Street today, the Dow snapped its 7-day win streak as financials weighed on the broader market and a rebound in oil prices stalled a bit. The blue chip Dow index fell 54 points to 18,868. The Nasdaq added 18 and the S&P 500 was off 3. But the small cap Russell index saw 9 straight days of gains, its longest win streak since early 2013. To the economy now, where inflation pressures remain mild, according to the latest government report. The Producer Price Index, which measures the prices that companies receive for their goods and services, was unchanged in October. The reading was below the slight gain many economists had been looking for. And manufacturing output rose for a second straight month. Production at factories, which makes up about 75% of all output, increased 0.2%. Factories are starting to benefit from steady household spending growth and gains in the production of motor vehicles following a prolonged slump. But that prolonged slump is still being felt at the nation's coal mines, where production has dropped sharply and where jobs have disappeared. President-elect Donald Trump promised to bring the coal industry back to its former glory. And as Contessa Brewer reports, that resonated with voters.
In tiny Powhatan Point, Ohio, the grind and whir of coal production sounds hour after hour.
This whole section right here used to be a coal mining section.
Inside a rural store outfitting energy workers, the silence is deafening.
We try to ride it out. Like I said, in the past 6 months, 6 items in the whole section were purchased and we had to close it out.
Coal's been on a steady decline nationwide. In the last 5 years, 30,000 coal jobs gone. The percentage of electricity generated by coal down to 31%, a 14% drop.
It definitely has affected our business.
Gina Ponzani runs her hair salon out of the same house where she grew up. As coal jobs disappeared, so did the extras customers were willing to pay for.
Wives and of husbands that worked in the mines, they maybe have to cut the budget a little bit here or there. They might, instead of getting color, they might color it at home.
Like many of her customers, she's looking for a change. Donald Trump campaigned hard here, and coal country in Pennsylvania, West Virginia, Ohio voted overwhelmingly for him. But independent experts say President-elect Trump may not have the power to keep his promise.
In recent years, we've seen a perfect storm of 3 factors that have come together that have put tremendous downward pressure on coal demand.
First, international demand weakened for American coal, though China has just announced a massive 20% rise in power produced from coal. Secondly, natural gas has gotten cheaper as production has climbed, while it's grown by 15% in the last 5 years. Coal production has dropped by 18%.
I can handle that. I'm an American first. I can compete with natural gas and will, as long as we have a level playing field.
Coal leaders accuse President Obama of stacking the deck against them with environmental regulation. They want Donald Trump immediately to kill the Paris Climate Agreement and to appoint a Supreme Court justice who will abolish Obama's clean energy plan.
Mr. Trump has a mandate to carry out what he said. It's going to be difficult to do it all, but he's got to do it.
He's not even officially in office yet. So yes, I hope they give him patience.
But patience, like gear for the coal miners, may be in short supply. For Nightly Business Report, Contessa Brewer, Powhatan Point, Ohio.
The decline in coal volumes has also hurt the railroads, which move that commodity from place to place. But there's renewed hope that the rail sector will get a lift from the possibility of increased infrastructure spending under the new president. Morgan Brennan has our story.
Here at CSX's Bedford Park rail yard, 22 trains loaded with some 1,300 containers move daily on the equivalent of 26 miles of track. It is a huge facility and it is privately funded by CSX. It highlights the fact that the freight railroads already maintain their own networks, on track to spend $26 billion this year alone. But if President-elect Donald Trump comes through on plans to drum up $1 trillion in infrastructure spending, rails will still likely benefit, as connecting highways, passenger rail tracks, and ports get an update. But the biggest boon would actually be moving the building supplies themselves, increasing volumes at a time when rails have struggled amid a weak freight environment.
We serve the industrial economy to a large degree, and when they win, we win. And there's opportunities here based on what ultimately the policies are going to be for potentially more spending, and that would obviously be helpful for us as well.
But there are many questions that are far from being answered, particularly around trade. If the incoming Trump administration takes a more protectionist approach to trade, upending NAFTA and taking a tougher stance against China, that could have big ripple effects in the North American supply chain. For the U.S. railroads, about 1/3 of total traffic is trade-related, according to the Association of American Railroads, with chemicals, grain, and autos among the biggest groups. Analysts say some railroads would be more affected, particularly those that have benefited from booming trade with Mexico, a growth story in an otherwise tough freight environment.
We're certainly going to see a shifting trade pattern, and that could certainly impact some of the railroads that go across border versus the eastern rails, which would hand it off to other railroads and continue that trade. And does that investment go back into that Rust Belt states where you could see more and more traffic originate from those areas?
And more traffic could come. The president-elect has vowed to reinvigorate coal, which for the rails has plunged by half from a peak of 140,000 weekly carloads in 2008. But while coal deregulations could boost revenues, and certainly the stocks, not even the railroads themselves expect to return to the commodity's glory days. For Nightly Business Report, I'm Morgan Brennan in Bedford Park, Illinois.
While out on the campaign trail, President-elect Donald Trump vowed to lower taxes. He promised to streamline the tax brackets and to cut taxes for the wealthy and the middle class. If all of this were to happen, how might his proposed tax changes impact you? Reed Frassa joins us, financial planner at Highland Financial Advisors. Good to see you. Welcome back, Reed.
Good to see you, Sue. Thank you for having me back.
You are looking back at history to tell us exactly what you think the president-elect will be able to achieve.
Yeah, it's an interesting statistic dating back to Woodrow Wilson to the present. Every president makes promises during their campaign. Statistically, about 70 to 75% of those promises actually get fulfilled during their tenure as president. So looking at that, even Barack Obama has completed about 73% of what he promised. So the trend follows. So a good probability that a lot of these tax proposals are going to remain intact, at least 3/4 of them, probably.
All right, so let's run through some of the things that you think will happen based on what the president-elect has said on the campaign trail. You say it's time now for individuals who have control over their income to defer some of that into next year.
Right. So if you look at those tax brackets, he's basically taken 7 brackets and boiled it down to 3 brackets. It's some simplification, but it's a good possibility that you may be in a better tax position next year. So for those people who have control over their income, it's not everyone, but sole proprietors, people who have a small business, corporate executives who can control deferred comp, things like that, postponing until next year, you're probably going to be better off postponing any income you can until next year. You won't be worse off, and you may be better off.
What if you're single, you file single? What do you think will happen? especially since Mr. Trump may have a friendly Congress, so he may be able to get through some of his initiatives.
It's interesting on the single tax bracket. So for single taxpayers, there's 3 brackets now. 12% tax bracket is for taxpayers who are going to be up to $37,500. The next bracket, 25%, is for taxpayers who are going to be up to $112,500, and then above that, 33%. So for single taxpayers, what we find is for both married and single, the people who are probably at that upper end of each of those brackets. So as you get close to the 30 to 37,000, as you get close to the 90 to 112,000, you may be actually end up being worse off than today. But the people, most of the people, it looks like they're going to be probably better off.
And what about if you file married, or if you're married and you file jointly? What kind of a break might you get, obviously depending on your income?
Yeah, so for those, there's a couple of things going on, especially as you get into the higher income brackets. The highest income bracket now is at $225,000, 33%. That's quite a bit of a reduction from that top bracket that used to be. They're also proposing to eliminate the alternative minimum tax. So there's a lot of moving parts to this, but for most people in that area, if you are married and you have income above $225,000, you're most certainly going to pay less taxes. We also see that the people in the very low bracket, whether you're married or single, you're probably going to pay less taxes.
All right.
Those are the two benefited.
We will see what happens.
Yeah,
Reed,
we
thank
will.
you very much.
Thank you.
Reed Frassa with Highland Financial Advisors. And still ahead, the big bet that 2 real estate developers are now making on a risky market. The Securities and Exchange Commission approved a new system to detect market manipulation. The agency okayed the creation of a digital warehouse designed to track and leave an audit trail of every trade made in the U.S. market. Officials say the system should be mostly operational by the year 2018. Facebook says it found more problems with the data it provides to advertisers and publishers that use its site. The social network miscalculated 4 metrics, including undercounting the number of people who watch an entire video and overcounting how much time is spent reading certain articles. Facebook and Google account for the majority of digital ad dollars spent in the U.S. Cisco said profit for the current quarter will be weaker than expected. This is the Dow Components switcher and router business struggles with slowing demand and increased competition. In the most recent quarter, Cisco earned 61 cents a share, 2 cents better than estimates. Revenue fell about 2.5% to more than $12 billion. But it was the profit outlook that moved the stock in initial after-hours trading. The back-to-school shopping season helps Target get an A with investors, and that's where we begin tonight's Market Focus. The retailer said an uptick in digital sales helped it beat both profit and revenue estimates. The company also raised same-store sales guidance for the quarter, as well as its earnings forecast for the year. Shares rose 6% to $76.03. A slowdown in customer traffic caused Lowe's to post a disappointing quarter. The home improvement retailer missed profit and revenue estimates, as well as same-store sales expectations. Lowe's also cut its earnings outlook for the year. Shares fell nearly 3% to $67.02. The European Commission said Microsoft has reportedly made undisclosed commitments to European antitrust officials regarding the company's takeover of professional networking site LinkedIn. Reuters says the EU expressed concern last week over the $26 billion deal. The Commission is expected to give its approval decision December 6th. Microsoft shares were up 78 cents to $59.65, while LinkedIn shares rose 1% to $193.47. After the bell, L Brands, which owns Victoria's Secret and Bath & Body Works, posted better than expected earnings. But the company gave a weak outlook for the upcoming holiday quarter. Shares initially fell in after hours and ended the regular session down just a fraction to $67.93. Well, today, the Trump name was removed from 3 large apartment complexes in Manhattan. Workers took down the gold letters that spelled Trump Place on the building's facade. But the building's landlord, Equity Residential, said it was a business decision, not a political one.
We've been in the process of dealing with this for over a year. Our goal was we have no interest in having any political position on anything. Once Mr. Trump made the decision that he was going to enter the political scene, we looked at it and said, you know, we just want to be neutral. We don't want to have an opinion. And this was part of an agreement we had with him. The agreement has expired, and we're basically renaming the buildings according to the street.
Sam Zell said the removal had nothing to do with resident protests as well to drop that Trump name. Two billionaire real estate developers, one from Cuba and the other from Iran, are teaming up for the first time, opening a luxury condo and hotel tower this week in the heart of Miami. Diana Olick talked to both men about their risky bet and that they're making on that Miami market, but also about fellow developer, President-elect Donald Trump.
Luxury, style, and more luxury are the buzzwords at Miami's brand new SLS Brickell. 450 condos, 2 James Beard Award restaurants, and a hotel, all in one colorful tower. It is the first collaboration for Miami's so-called condo king George Perez of Related Group and California-based hospitality mogul Sam Nazarian of SBE.
I think he moves the centers of gravities of different cities with his projects, as he has projects all over. So as it pertains to us, it was one of our biggest, I think one of the biggest milestones of our company, of me personally, to have him ask us to work with him.
The project sold out in 90 days pre-construction. That was back in 2013 when sales were booming. The Miami market is now slowing down. Condo sales are off 25% compared to a year ago, and prices are falling for the first time since the recession.
They're very safe investments, and nobody's speculating. There's none of our buyers that were buying saying, I'm going to flip this apartment before. They were buying saying, I'm either going to use it as a second home or I'm going to rent it. And by the way, our rental demand is huge.
The project also sold out before President-elect Donald Trump was even on the political radar. At least half of Miami condos sell to international buyers, and the immigrant population here fuels not only real estate, but the workers who build it. George Perez is a Cuban-American, Sam Nazarian, an Iranian-American.
The more we can be consistent in whatever path we take, and a welcoming path, because this country is a welcoming country. And I think from that perspective, I feel he's also, or has been up to now, in the hospitality business.
I think he well understands the importance of investment in cities like Miami, in cities like New York. That's what has helped him become what he's become, and he's marketed his name internationally very well.
But they believe in the market and keep putting the towers up. For Nightly Business Report, I'm Diana Olick in Miami.
Coming up, the road ahead, how business may change for the auto industry during a Trump administration. Airfares may actually fall next year. According to a report by American Express, overcapacity and increased competition among carriers could put downward pressure on prices. Short-haul economy flights could see 3% drops. Long-haul business class fares may decline by about 1.5%. But the airlines may charge higher fees to offset those lower fares. It is auto show season, and this year, near record sales, a strong economy, and a slew of new models are helping generate some buzz. Phil LeBeau is at the first big show in Los Angeles, where executives are talking about the president-elect and the new cars and trucks that are turning heads.
In a city of stars, no expense is spared rolling out dream cars. Take the $323,000 Mercedes Maybach Cabriolet, unveiled in the Hollywood Hills. Mercedes expects strong sales of a rich vehicle only the very rich can afford.
We're only building 300 worldwide, and we're only bringing 75 to the US. So we will have a situation that we already see where we have more demand than we actually have cars available. But I think that's the right strategy.
LA remains the center of America's luxury vehicle market, but it's also become the largest market in the country for pickup trucks, which is why GM chose LA to roll out its new Chevy Colorado ZR2.
What we know here is that, there's a lot of people who want to go off-road. They really want a capable vehicle, and I can tell you this is seriously capable.
But amidst the new models, automakers are facing questions about doing business during the Trump administration. Will fuel economy standards drop? And will cars built in Mexico but sold in the U.S. face a 35% tax? It's a move that could cripple auto sales.
What the automotive business is it's an international business of parts and manufacturing and logistics and trade. It's an ecosystem. It's an ecosystem that works quite well in America. We make a lot of cars here. We make a lot of cars across the globe. And I think the ecosystem works.
The consumer really isn't looking at uncertainty when it comes to the automakers. They're focused on what is being offered today, what is out there on their showroom floors.
One thing is certain, demand for luxury vehicles is not slowing down, especially high-end SUVs. In fact, when you walk the floor and talk with auto executives here at this show, one thing is clear. They plan to feed America's appetite for bigger vehicles, which is why we should see more SUVs debut at upcoming auto shows. Phil LeBeau, Nightly Business Report, Los Angeles.
And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us. Have a great evening, everybody. We'll see you here tomorrow.